Good morning, everybody. Doing that. There we go. All right. So Friday, options expiring, and this move up appears to be complete. And up against this pivot. Maybe gets a little bit higher today. Things are hanging up there pretty well. They haven't violated the trend here on the hourly. Would have to break below that pivot. So on the hourly time frame here, it's got one of those lower high, lower low, kind of like flags, but just still bullish, but a red day at this pivot. Maybe we're going to get a boring day of consolidation after the move up. Would make sense after a move like that. It is up against 4,400 on the futures and the pivot high there. What I call, the real stiff resistance would be up here, and that would be a pretty big move from here, considering things pretty much stalled yesterday anyway. Small candle body in between the 20 and the 50. It'd be surprising to see it get that high. I don't think it will. I think pretty much going to stay in this area over here. And our first reference point of support is yesterday's low, as always. And so far, just a quiet morning. Let's look at SPY. And so it closed up near the high, which kind of suggested it could have gapped up. That's not happening, but it's not a big gap down. I would just say it's an uneventful open. So 436, 136. So we look at how far it gaps down into this green bar. How much of a shock is it? And I'd say a little bit, right? I mean, it's not gapping under the green bar, but it's a decent sized gap down. I mean, as I look at the futures, and it's 24-hour chart, so it doesn't. And that's why we always look at SPY too, and look at where it's trading. And looking at that, it gives me an idea. What's the probability of taking out today's high after a gap down? How far down does it have to travel to do that? So if it was gapping under the low, the probability of doing that would be like an outside bar, right? Because it would be opening under the low. It happens, but not likely to it's not gapping under it today. But it's a pretty sizable gap down, which opens up the door to thoughts of, okay, lower to where? Well, 430 in the past over here was a pretty significant support. Will it show up as that support today? Not so sure. Yeah, so 30. So basically leads me to thinking the same, consolidation day of the gain. And I'm a little surprised to see it gapping down at that much, to tell you the truth, which is going to leave a sizable resistance overhead. So how do we relate that to SPX and today? So as I was looking at this and looking at where the premium was, I was thinking maybe I'm really not too anxious to consider the call side, but there was premium. I got written down 44.65, which is 60 by 75. That's not bad. Thinking it would have to travel. Yeah, George, what's up with Zoom? Would have to travel quite a distance. So SPY is like down here. So to get all the way back up here, it would be quite a run. So I think that is doable, and you've got that resistance up there. On the downside, I'd say it's more of a no-brainer. 42.40 to 42.50. Was it, again, we're thinking SPY and gapping down here. Could it get all the way down there? I don't think so. That's a hell of a long way to travel. And after this bullish move, it's options expiration. 44.50 is, I think, where it could be just gravitate around and just hang around there. So I think either side, I think, would be fine today. 44.65, 42.40 to 42.50 down here. And trading anywhere in here, well, we'll just have to see where that all goes. There's a void below. There's a little bit of a void above, but it's going to open up, down here. It's going to leave pretty stiff resistance up here at 4,400. So looking at where's there's protection, overall trading range, gapping down into the range, kind of leads, my bias to thinking it's not going to go much of anywhere today other than whip around within this area. All right. Nasdaq. Didn't quite get there. It's been the weaker, had a hell of a week moving off of this low. And probably going nowhere as well. Nas best week since February. Well, it was down 20%, Dan, a little over 20%. So it's a positive that it had that good week as a start. And so looking at our internals here, historically, when I see something like this, and I was hoping it would have gotten down here, a little more of a sell-off. It didn't happen. But historically, when I see it go with a straight line move like that, it suggests higher prices. It doesn't mean it's going straight up, but it does suggest buying the dip. So this might next week come down to a zero. We get some profit taking, and this pulls back in here a little bit, and we get a larger bottom. Russell's up at the top of the range, makes sense. We're going to get some selling. YM, was down almost 200 today. It's coming up toward the 50. There's going to be sellers, same pattern on the hourly. And Bitcoin stuck in the middle of the range. Oil reached that area where we said it would probably bottom out. I'd like to see this get a retest or go sideways. And so if this continues up, we know the markets aren't going to like it. So we'll keep an eye on that. Silver's down a little bit, and this maybe gets a retest for next week. And gold, similar. So when they come down steep like that, that big steep angle of retracement, a retest pattern is the ideal scenario for a long. And well, the transports had big move up, but again, up at resistance. So this is where the heavy lifting is for the longs. You got trading ranges, still, downtrends. It hadn't retraced deep enough really to call it sideways yet. There's plenty of overhead resistance here. So I think the upside is going to be capped at the, this for today, the beginning of the week. And we'll see how it deals with this resistance next week. If it goes sideways or a shallow pullback, the internals come back down toward zero. I think that could set up some kind of a long, but there's plenty of overhead resistance now. So it's not like you would get a momentum move to the upside like this. That isn't likely to continue unless we get a correction bar. Where it would go maybe that sideways action today, and then we get a break below and a bottoming tail bar where we can get a continuation pattern. But we don't have any void here. So while it makes sense to be thinking longs on the beaten down stuff, and there's plenty of beaten down stuff, because while the Qs are down about 20-something%, there's plenty of stuff down a heck of a lot more. Just as things that, well, that's just a V bottom, but we talked about PayPal. These kind of bottoms are a lot more reliable. So while that's up at a pivot and there's going to be sellers here, some bullish price action at that resistance point could be a great opportunity. And let's see how much this is down percentage wise. Yeah, look at that. 68, 69%. So we've mentioned this in the past that market corrections, even, ones that we saw over the last couple of years that were more benign, 5%, a little more, other stocks can go down a whole heck of a lot more. And so the market masks the damage that's being done. I did, David, and I just said 65. Sure. All right. All right. Interest rates. Wow. It's real close. 160, 164 between the 5-year and the 10-year. And so, that's, we had some bullish stuff going on, but and it's never been a turn on the dime type of situation. But these yield curves getting so tight like that, well, let's take a look at this. Some of these are tight, but, the very short term versus the long term actually moved up. Not dramatically, but, that moved up a little bit, but these are coming down. That's a problem. Well, the markets don't care about it this week, but we'll see how much they care about it or the lack thereof next week. We'll see how that plays out. But historically, that is not a good thing for the markets, but it actually could be something that we look back on and see this. And I'll remind you what we talked about. And, it could be a couple of months from now before, something like that really takes hold. But, we need to see this also to deteriorate. And that is historically when there's been a major problem. This is for sure. Well, it's been coming down a long time and the markets have come down quite a bit, but, coming down to this point where, inversion, and we talked about this in a past MT Live, where, all of these together, we know, it's going to be bad for the markets. Whereas this, in opposition with each other, is similar to, what we have here, in that you've got breadth up here at a bearish level, but you've still got sentiment down here. They're not in agreement. So again, looking at the strength of the move, which was confirmed by the breadth, to think buying a pullback where this pulls back and, this still being down here should result in profitable trades. Now, not necessarily SPX is going to be the best thing to do. This might be more stuck in the trading range for a while before it could really come out of here. But those beaten down stocks are probably going to be the ones that are going to produce the best returns.
Greg, what's the top yield there?
This is the 3-month versus the 30-year.
And why is that one so important versus the bottom two?
Because this is the one that is truly a representation of the money the banks are making, like free money.
3-month versus 30-year.
Well, it's like, okay, what do banks do? They go and they buy, borrow from the Fed and they lend it out to everybody else and they make the spread. And so, banks can leverage it like 30-1. So over here, you got financial institutions losing money hand over fist or not borrowing at all, and the liquidity dries up. So over here in the short term, again, we're looking at something short term versus something intermediate to long term. And what'll happen, we all know the Fed is, said we got, we're going to raise interest rates basically at every time. So we'll see if they actually do that. But as this number begins to increase exponentially as they do, and they always anticipate, it's already up from where it was at 0. But it'll eventually go higher. And then we'll keep an eye on this because, the saving thing here, we looked at the 30-year, is that it's been going up. Now, if this becomes too restrictive and this begins to come down, that's where this line chart will start to move back down here. And that's where it'll become a problem intermediate term, where we could say, hey, this has been the precursor for a true bear market. And you can say, well, the Nasdaq went 20%. Well, look, you go back in other times, go back to 2000, where you had an alignment like this, and the Nasdaq went down 90%. So, the market went down a lot, Nasdaq wise. We looked at PayPal down 70%, but the plenty, back in 2000 into that bear market, a lot of stuff went to zero. That was the internet.
But look a couple months ago, they were pretty damn close to being in alignment. All three were pretty damn low.
That was just before the pandemic hit.
Oh, is that far ago? Wow.
And the market collapsed.
No, I thought it was more recent. All right.
No, 2019.
Yeah, I couldn't see the date. All right.
Yeah, I didn't have the date on there, but
Right. No, that makes sense then.
All right, but this was just before, everybody finally knew about it and the market collapsed. But this was a heads up. Something's going wrong here. And that's why we look at this, is that, from a very long-term point of view, it's like, well, when it's down here and it starts to rise, the markets are still in turmoil. And, they get up here and it's like, okay, they're going to bottom because the liquidity is ridiculous. And, this moves quite slow. And that's why we don't really look at it too often. But, when this is down here near inversion, so this is the 5 versus the 30 and the 5 versus the 10. So we look at different yield curves, and, the ones that are closer together are going to be the ones that give us a heads up sooner. So, and when this one comes down, we know for sure historically really bad stuff's going to happen. And, you go back and look at 2000 where that got inverted. It was like, okay, transports are going down, yield curves are inverted, stocks are still holding up quite well. And it's like, who cares? He's still making money. And then all of a sudden, the proverbial crap hits the fan and everybody got killed. So, all right, that's it from me.
All right, cool. Yeah, that's a good lesson. Well, so last question on that. Because these things are late signals, so on and so forth. So would you get more bearish if the chart's confirmed, breakdown continuation, if you saw deterioration in the top one, 30 versus 30, as opposed to waiting till it got down to the bottom, in which case, what if we're already down another 15%? And it's like, well, that didn't help me.
Well, look, historically, it's gotten down here. When it's been moving down and it's gotten here, the markets have held up relatively well. So, as these were in alignment, and this was pretty much in alignment. This is kind of weird, So it's different. Whereas if this was still moving down, we'd be getting more and more and more cautious, because it's getting closer to the point where we know it's going to be a problem. So you'd be anticipating that break coming, or an M top, or
Right. That's what I mean. Right.
Yeah.
Cool.
Okay.
All right, good stuff. Hey, John, you know why this chart reminds me of you? Our discussion yesterday of, yes, that's a 1, 2, 3, but it's not from a consolidation, and it's extended, and it's at the 20, and it's also a sell setup, right? But me and my butts, look at this beautiful one. USX 1, 2, 3 from consolidation, bottoming pattern 20, 50, breakout weekly, price void. This one's fabulous. So yeah, just because you have a pattern doesn't mean you do it. You got to assess the other concepts that make up our method, plus multiple time frames, so on and so forth. I don't know, John. We'll play it by ear, but as of right now, yesterday's stop held, so we'll just leave it for now. I can't give you a blanket answer because I gotta see what's going on. All right, we don't have that much inventory. We have Bitto put naked puts, the 24. So I said just let expire worthless today. PayPal, we took our profits on the put spread yesterday because we just had an amazing one-day run on Tesla, but we still have the directional. PayPal's in the bottom right here. We made, if I can tell you, PYPL. We sold a third of our calls at 43% return in one day. So Greg, I don't know why you're so afraid of buying options. Mr. We have naked puts. I said bid a dime. Tesla had stop 8. Correct on Tesla 891. That's correct. It's over this major pivot over here, $1 higher or whatever. All right, so the opens are okay. This is 0 DTE day up. Obviously, it's quad witching, which is the every quarter. So we're gonna have a lot, and most of that in my experience, it doesn't just happen on a dime. It's been happening during the week also. There will be some wild whips in the last half hour in my experience. Argo here. This was a beautiful gap reversal Climo that we bought. And then I've left it posted as a new trade. So it actually triggered yesterday, but I said, let's wait. And now I just posted, if it gets over this topping tail with the gap down in the market, then I think it's good to go. I'm saying pre-market here, all 4 horsemen are perking a little bit. And Greg mentioned these beat up stocks. I posted a couple of them in Telegram. I gave a big list. Or no, I didn't. I gave that to YouTube channel. Let me see if I can grab it for you real quick. Where are you? All right, here we go. Here we go. All right, so this way, if you all want to put those in a minder and set alarms and help me watch them, and I have them over here, we'll get to them, but that's just a nice pretty version right there. Boxel, I see it gapping down, but if it turns around and takes out yesterday's high, that's a retest. It's not a perfect W because of these overlapping bars over here, but it's a bullish retest. That's worth, put that on bottoming list. This gapping down, it's in a downtrend. You're gone. These are earnings. You're garbage. Stone, that's a big gap up, 1227. The gap's too big, but this is one that maybe in 3, 4, 5 days it chops around up here and then gives us a new entry for a buy setup, high or low or whatever. So I'm going to leave this one on my list because I think the bigger time frames. Look at this. This thing was $95 under 10. There's another exhibit A of what Greg said. There's so many beat up stocks that are decimated, that is being hidden by the broader markets only down 10%. There's stone right there in your face. and a bunch of Wall Street loved ones. And look at Carvana. Look at this, $360 went down to 100. Adobe, Wall Street loves Adobe. This was $700. I mean, there's many. All right, said G has a secondary offering. That's a bearish gap, bearish pre-market. So that's a bear call credit spread watch. X had earnings, bearish gap. 33.43, so it's greater than 50%. So that might be a 0 DTE call spread. FedEx gapping down. You know, there was a headline in the journal today that said, oh, FedEx, 10% profits up because they rose prices. Well, guess what? That headline is meaningless to the collective beliefs of shareholders, right? Traders. That's a bearish gap. Sell setup pre-market. So FedEx is a 0 DTE call spread candidate. Well, the market's rallying, Greg. We had Q spiders ripping here on the 5-minute. So that's putting a bid under all these fangs with the exception of Google. All the fangs are popping. On curve, no interest. Downtrend, opening flat. Joan down $1. No great pattern. GME, I told Greg. Debbie knows this. If we can get her out of the yacht club, Debbie knows that weekly chart, it was right here around $1.60 upside shakeout. I said target $50 from 160 to 50, and look at this weekly chart. See if you would ignore the noise on the smaller time frame, you could have held on to this as a core short. You had a breakdown. You got, look, not even one green bar. Now you got a sell setup. Now you got a price void. I mean, look, folks, where I got my $50 target from. That stock's in pain. FedEx here falling. Hey, David, you like 0 DTE day? See, it's going to be spready, I'm sure, but see if you can get us a 0 DTE. 230 would be ideal. I just think it's going to be too darn spready. Here's another bottoming pattern. It's up 4 bars.